Now to the numbers from AkzoNobel. The company's gross margin expansion in the fourth quarter led to overall operating profit growth in the quarter. Revenue growth in the fourth quarter lagged when compared to what we've seen from peers, which have already reported numbers. Rajiv Rajgopal is Managing Director at the company. He's joining us now to take some questions. Mr. Rajgopal, good morning. Good to have you with us here. Thank you very much for your time. So let's just start with, with paints, its top line to start with. What kind of volume growth did you see in the fourth quarter? But more importantly, what are your expectations from FY24 on the volume growth front?
Good morning, Prashant. Good morning to all the members there. So as far as last quarter is concerned, yes, aggregate we grew at about 10%. All our businesses were in a similar range. On paint specifically, we had a high single-digit volume growth. We still have a bit of a price increase, which is sort of coming off, which has been accretive to our EBIT margins and our sort of performance overall.
Sorry, what was? Did you give us a number for 24? What are you expecting?
So we are looking at a double-digit volume growth because going forward, we do not, given the sort of way the raw materials is panning out, Prashant, we see largely a volume-led sort of performance going not just for 24, but even for a couple of years ahead.
Early double-digit or high? It's not closer to the 20%, 15% plus.
Well, Prashant, so let me first put it as double-digit. We don't get into specifics on segment, as you know. But suffice to say, look, I think when you look at our last year full year numbers, we've ended up growing closer to almost 22%. So really, we've been one of the fastest growing players in the industry. We've gained market share significantly on a full year basis. And our intent is to continue to be in the top 2, top 3 players in terms of incremental growth. So that really will sort of, if you work backwards, will tell you where we are sort of gunning for.
All right. Hi, Rajiv. Good to hear that you've outgrown the industry, as you say. And I think last time we chatted, you said you're in number 4 position and you're looking to get into the top 3. Could you give us an updated market share? I think you were in that 5.5% to 6% odd with a bigger control, a larger market share in the premium segment. So tell us, what's the market share? Where's it headed?
Hi, Nigel. So yes, so first let's look at it. Even if you add, in this industry, given the size of 6 billion, 6.2 billion, you gain about 0.1, 0.2. So we've gained about 0.2% market share on a full year basis, right? So yes, we dial up our premium. Our premium market shares are significantly higher. We've got approximately about 16.5% market share in premium. And even in the last quarter, we had a significant growth in the premium segment. So we are seeing a bit of what you would still call a bit of a K-shape, where we've seen premium growing significantly faster. Maybe that was a little different compared to some of the other players. And that's something that we are working on to really say, how can we continue to grow in mass and economy? Yeah, we've seen significant growth coming in premium and waterproof, but really maybe on the mass end. Mass, the growth largely came because we are driving distribution 2.0, and we've sort of moved into a larger number of towns where we were not present. So really, how do you really dial into those segments which we've not been very aggressive? For 2 reasons. One, the raw material costs obviously have just started getting benign now. And secondly, we had to sort of readjust our portfolio a bit, both in terms of value-added products where we can make sure that it's a accretive long-term play, given what you're going to experience in the industry in 1 year from now. So that's the way we really position. But if you take a 2-3 year trend, I mean, you see, I was a bit disappointed we didn't touch 4,000 crore. I think that's something that personally was ambition. Given when I joined the company, it was just about 2,200. Yeah, so really, that's really the area of focus.
Okay, Mr. Rajgopal, we are running out of time. This is Sonia here. I just had one question, and it's a 2-part question. You're, of course, facing a lot of competition, right, from the likes of JSW, Grasim, JK Cement. How are you combating that? And would this mean higher marketing spends that you'd have to do as a percentage of your sales, which has already gone up to about 3.5%, I think about 2% of your business? Do you plan to spend more, and would that eventually put pressure on your margins, perhaps?
So let me answer the second part first, Sonia. I think a valid question. Yes, it is, because ultimately we have to make sure that our propositions are able to withstand the intensity of the sort of marketplace. Yeah, so we are planning to come with, quite exciting stuff for consumers well before Diwali. And that would require obviously a still significantly higher market spend, but I would still say that we would be in the 4.5 to 5 range first before we really start seeing whether we need to get more aggressive, to answer your question. In terms of EBIT margins, look, I think that will get compensated with, because there is a softening also happening. If you look at our current EBIT margins on a full year basis, even in the quarter, it's been a little stronger than some of the other players, the number 2, number 3, etc. So I think we will continue to sort of make sure that we are sort of keeping an eye on the profitable growth story, because that's what we really want to do and make it accretive both in our paints business and in our coatings business. So yeah.
Okay, Mr. Rajgopal, thanks a lot for joining in and giving us a quick take on the demand situation as well as the way forward for the business. That's AkzoNobel. Let's